Okay, is Aduro investor relation expenses is getting out of control? Because we see the company now spending a lot of money on uh, promotion and sharing the story. So is this something we should be worried about? Let's have a look at it. So how much the investor relation spending was over the years? This was over the past since 2021, so in the past 5 years, they've been growing steadily, spending. Uh, in 2026, I took this projection for myself. If we take the same amount from 2025 with the same firm plus what they just announced with the new marketing um, promotion service that they hire, so it's gonna, I project it's gonna be minimum 1.2 million. So is it way too much? Well, I know that it's around 10% of all the expenses of the company goes to investor relation. So in the industry, it's considered high. Um, so I think it's something we need to look for. Is this actually a good spending or not? Um, why even do ER? Because this company doesn't have any revenue. They need some awareness and they need some financing because they rely on financing to survive. For awareness, well, it's still under the radar. They came from a secondary exchange and now they came to Nasdaq. So and there's like 10,000 stocks to choose for investors. So they need to share the story. So at least what story they gonna share? Well, I think Aduro can um, can afford to share the story because they've been executing in the past 3 years. I think for existing shareholder, uh, you can see that we know that they've been executing. They have some goal every year and they execute, and they never over promise and they keep delivering. Same thing with their plans that have been building. So I think that's something they're gonna. That's one of the information they want to spread. Hey, we've been executing. Look at us. They don't have much shareholder and they want to increase. They don't have any institution yet also, and they want to spread the story also, the brand, increase the reputation. I think the thing we have to look for is this just fluffy promotion? Is this like a uh, what's the quality of the message they want to share? That's something I think as an investor we can check, and also education because the good thing with this company we have a lot of education around. There's a gap between chemist and investor, so this you cannot keep a company misunderstood for so long, right? Uh, this is what the company is trying to do, and how are they trying to do this? Well, with institution, they're doing conference, invite only conference with some forum. Also the same thing with customer and for also retail because most of investor are coming or retail, right? There's not much institution in the stock yet with the videos and influencer. So I mean, there's nothing wrong as long as the story and everything is working. So what I mean by is it working? Because it's an early revenue company, we know we're gonna need financing. So we want to see if the financing terms are getting better over time. So from what I can see is they've been raising money every with a steady time every like 12 months. Sometimes was longer than that, shorter than that, but they always raise money enough to deliver the next deliverable, and um, they when they have the opportunity, they raise more money. So people don't wait for the next financing, and this also give less dilution for the shareholder. Of course, if the price go up, dilution go down. Let's have a look as if we can actually calculate this. Um, let's say the company is spending 0.8 million per year. That was from 2025. They need to raise, let's say, 9 million. to the next deliverable. Maybe it's just for the burn rate. Maybe it's to start to give some milestones. And let's say with investor relation expense, the stocks and with the investor relation expense and the execution they prove, um, the stocks is at $8. They they have to share to issue around 1 million shares. But if there's no investor relation and the stock stays like dead money and they just focus on the business and they don't acquire new shareholders, the stock maybe is gonna stay at $6, and you have to share to issue like 1.5 million more shares. So it's almost like 50% more share just to get to the next deliverable. This is of course super simple, but so the takeaway with this, of course, it's super simplified and there's warrants that are not inside this. And if this is only if we allow for investor relation, but the thing we can look at it is that with the higher price of $8, we save maybe around 430k share that a value at 3.4 million. If we negate the cost of investor relation, it's around $2.6 million the company just saved. So just in this example, the ER paid for itself. So what we can expect in the next few weeks is that if the company is spending money on investor relation, it's because it's a good news, and we're gonna acquire new investor, and it's gonna be easier for us, less dilution for the next year, for futures ahead. So that's the takeaway that I think is important for financing. And also something we need to look at is the liquidity improving? Is the spread between the bid and the ask getting tighter? So we've seen in the beginning there was no liquidity at all. Over time getting increased. Then they go on Nasdaq's, the volume jumped, and here there's more and more awareness with some retail trader that come. So this is another good thing that institution want. They're never gonna buy when there's no liquidity. Next is the stocks getting more coverage and reputation improving. Well, we know that these people they made uh, it's still paid research, but it's still getting more information that the institution is gonna look at it. And we also added deborrow with the analyst coverage of with the price target. So some investors never invest in the company if they don't have any information or any analyst coverage. So it's just better for the company. We want to grow our shareholder base over time. So that's the story for Aduro. I think they can afford to share the story they've been executing so far, even if it comes as a cost. The cost of dilution is cheaper than the investor relation over time. And just see a scenario that the company doesn't do any ER, they cannot use their stocks to finance themselves. This is a company that have 2 million market cap. They have a 40 million revenue. They have some revenue, also some net income. I mean, they're not gonna be bankrupt very soon. I believe it's super undervalued, but there's no liquidity. The company doesn't do any ER, and like it's super hard for somebody to come in and come out. So I don't want Aduro to be like that. Of course, this company can finance themselves. Aduro cannot do that. But that's an example with no ER. It's gonna stay dead money for what? How long? I don't know. It's not good for shareholder value. And in the next video, I'm gonna show some scenario that you under deliver and over promise, because again, this is a company that have to share a story, and I think it's important for us to look at it.